can you actually get funded and eventually get a payout from a profit account or become profitable in your private account and get a withdrawal by just trading simple support and resistance? If you have to ask me that question, I will say the answer is unequivocally yes. You can actually get funded, get a payout from a profit account, or even get profitable in your private account and get withdrawals using simple support and resistance. And I'm going to show you guys step by step with live examples, with live payouts and live withdrawals on this video. Now, this video is going to be featuring good funded trader because last week we did a giveaway with good funded trader, and one of the traders that actually got those giveaway accounts got funded and is already at the funded stage. Very soon it's going to be expecting a payout. And guess what? The strategy she's using is strictly support and resistance. Yes, strictly support and resistance. Nothing added, nothing subtracted. She is keeping it simply stupid. Keep it simply stupid, the key strategy. So she's respecting the key strategy on her trading, and I want to show you guys how you can do it on this video coming up right now. Before we get into the video, if this is your first time watching me, my name is Ndemazeah Godlove. I've been trading Forex for 10 years. I've seen the good, the bad, and the ugly when it comes to trading, and my goal on this channel is to show you guys tips and tricks on how to be consistently profitable. I currently own the biggest YouTube channel in Africa, in the continent of Africa, in the niche of Forex and in the niche of finance. And the reason why we got to that level is because I listened to you guys. I'm here because of you guys. And it's also because of you guys that we got that place. We're rated one of the fastest growing YouTube channels in the niche of Forex. And my goal is simple: to give it back to the community, to impact you guys. So if this is your first time watching me, or you've been watching me and you haven't subscribed, smash that subscribe button below to subscribe to the channel so that you'll be updated anytime I come up with awesome content like this. There's no intro on this video. We're getting straight to the video because I don't want us to waste any time. Now, what is support and resistance, right? We have a chart on our screen right here. We're going to be using typically gold. Almost 80% of traders now, traders in the Forex market now, in the retail Forex trading now, are trading gold or Nasdaq, but the most traded asset now is gold. So I'm going to be using gold to show you guys step by step, and also on funded accounts, how you can trade just support and resistance. Keep it simple, just support and resistance, and you'll be able to get funded and eventually get payout. Before we even go into that, you need to understand in details what is a support and what is a resistance. All right, if I'm sitting on this chair, look at me. All right, if I'm sitting on this chair, there is something supporting me from respecting gravity. All right, there's something supporting me, right? So just know at the back of your mind that a support line is always below. That's the best way you can use. Remember, I keep it simple. One of the reasons why my channel is what it is and it grows well, because I keep it simple. I'm not going to come here with crazy big terms to say, no, it needs to swap liquidity, jump over the fence, then you know that support. No, if I'm sitting here, there is something blocking me from respect. There's something that is actually showing that I'm respecting gravity, which is the floor. So the floor is what? It's my support. It's supporting me. So your support line, because when it comes to drawing support and resistance, some traders used to be confused. Should my support line be above or below? Should my resistance be below? You see, so when it comes to your support and your resistance line, support line is always below, because that's the level where the price was supported. That's the level where the sell pressure was prevented. All right, so your support line is always below. And now let's just say, out of a sudden, if I don't respect gravity anymore and I just start flying, I just start, raising. You watch those movies where you just see someone start rising, like maybe like an engine. I just start going up. There is something that is going to block me up. There is an area where I'm going to be resisted. So that's my resistance level. So the ceiling is obviously going to be somewhere. I'm going to be blocked because I'm sitting inside the room. So the ceiling is obviously going to block me from going up. So that's my resistance level. I'm going to face a resistance at that level. So my resistance line is always up. So your resistance line is always up and your support line is always down. Now, I just mentioned line, and you guys, I'm sure some of you guys have already taken note, like support and resistance line. No, you don't call it support and resistance line. You call it support and resistance zones, not lines. Zones, not lines. Because if you're calling it lines, there are many times you have fake breakout or stop loss hunting because you were calling it a line. But if you are calling it a zone, you've already told yourself that the price can still come and and fluctuate in that zone without you already concluding that, oh, the price has already broken my support, the price has already broken my resistance. So that's the theoretical part of it. Come now, let me show you guys the practical aspect of it and how you can draw it as a Forex millionaire. Now, this is my chart right here, and I want to keep things simple. I have two moving averages here, which I'm going to be removing them because we're not talking about moving averages today. So I'm just going to hide all the moving averages. Let me hide that and also hide this one. Okay, good. So all my moving averages are hidden. I'm on the 1 hour time frame, and to trade with support and resistance, like I said, you need to treat them first as zones, and secondly, you need to be able to draw your support and resistance effectively so that you wait for the price to come to your support for you to buy, or the price goes to your resistance for you to sell. And then there are still some few rules I'm going to be giving you guys. You don't just, now I'm going to wait for the price to come to my resistance and I sell or go to my support. No, if the market is in an uptrend, there are rules you need to follow. If it's in a downtrend, there are rules you need to follow. If the market is consolidating, there are rules you need to follow. So in our case, let's just quickly draw our support and our resistance zones. Remember, I'm calling it support and resistance zone. So I can just go back to maybe 1 month behind. Let's just go to maybe 1 month behind to quickly draw our support and resistance zone. Just looking here, I can just use, I like to always use this. Let's start with this rectangle because we are looking for what? We're looking for, let's start with this one right here. Good. I like this. I like this. This one was really, really long. So let's start with that one. Oh, let's just start with this. So this is definitely, this zone right here is definitely going to be our support, our resistance. And this area here is going to be our resistance. It's going to be our support, sorry. So we just draw this, and then this. Can you see that? I can still increase this just a little bit to show you guys, to make it even. Then I can extend it behind a little bit. Perfect. Can you see? This is a typical support. This is our support. I'm just going to write there. This is our support. And then this is our resistance. Remember, I'm going to show you guys how to trade this. So don't worry. The most important thing is to know how to trade, how to draw them correctly first. So that's our support. I'm just going to plot them nicely. That's our support and our resistance. Now, this is in the case where the market is actually consolidating, where your support is right there and your resistance. Consolidating means the market is flat. It's neither in an uptrend or a downtrend. So in that case, once the price comes to your support, you're going to be buying. Once the price goes to your resistance, you're going to be selling. When it comes to your support, you're going to be buying. When it goes to your resistance, you're going to be selling. That's what you do if the market is consolidating. Those are the rules for a consolidated market. But if the market is in an uptrend, you're only going to be looking for buy opportunities. Meaning, even if the market goes to your resistance, don't sell. You only wait for it to come to your support. And in the same way, if the market is in a downtrend, you only look for sell opportunities. Meaning, if the market goes to your resistance, you sell. Even if it goes to your support, you don't buy. I'm going to show you guys typical examples with live trades, which I took with the community on Telegram. So in this case, I would have easily I waited for the market to come here with the close of this candle right here, this bullish engulfing candle. That would have been my buy, maybe my stop loss somewhere there. And in most cases, I used to go for a risk to reward of 1:2 or 1:3. Let's just keep it 1:2, right? That would have been a clear win right there. The same way, conversely, as soon as the market goes to my resistance, I would have waited for this candle right here. This candle, they call it the Marabuzo. You guys who know candlestick patterns, right? The Marabuzo candles, where you see 3 candles dropping in one direction. That's a confirmation of a sell market. So I would have entered somewhere here. My stop loss would have gone here, and I would have gone for a risk to reward of 1:2 on this trade. So that one again, boom, would have hit clearly and would have already been out of the trade. Now, look at what happened here. The market came again and tapped. In ICT, you used to say tap in that zone, right? In ICT, that's what you guys used to say. But the market came again, tap in our support zone, and then close bullish. You can see this bullish engulfing candle. That would have been a clear buy trade right there. This is my clear buy right there. My stop loss goes here, and my take profit is a risk to reward of 1:2. Boom, 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 boom. That's it. That's it. Now, look at what happened here. By the time we're hitting our take profit on this trade, look at the buy momentum, all right? The momentum in which the buyers used to break this particular resistance. This already gives you an indication that this market is not going to be respecting support and resistance in a consolidated market anymore. And look at what happened. Look at what happened. Voila, what has been happening to gold ever since? Can you guys see this? Look at the way the buy momentum, look at the way the resistance was broken, the way the resistance zone got broken. So there was no instance there was no scenario or any instance where you would have entered on a sell, because there was no sell, there was no candlestick pattern or no reversal pattern telling you to sell at this point in time. So at this point in time, anytime, another rule, anytime your support or resistance zone is broken, you wait for a retest. Don't just jump into the trade, you wait for a retest. So that's another big rule when you are trading support and resistance. And you can see the same thing happen here. This resistance zone was broken, and look at the retest. This is the retest right here. At this retest, this is where we're going to be buying. This is where we're going to be buying this market, because the market has tapped in that particular zone. That's what they call break and retest. It's simple. There are gurus on the internet or Forex influencers that claim their strategy is just break and retest, and then they sell courses, say you can. But it's simple. This is simple break and retest. When that zone is broken, wait for the market to come and tap on that zone again, and then you enter on the buy. So this one somewhere, let's just say you have gotten again in somewhere buy position, look for any opportunity, any buy opportunity telling you the market, enter somewhere there, go for a risk to reward of even 1:5, 1:2, or let's just keep it 1:2 as we always do. 1:2, boom. Let's see, let's go and see if we would have hit our TP. Boom, boom. If we extrapolate and go left, you can see our TP was hit right there. Our TP was hit right there on gold. Can you see? And gold has been going up ever since. This is the kind of trade where if you were going for a risk to reward, let's just say if you were just holding this trade and you wanted to be trailing your stop, right? You would have hit 1:10. This is the kind of trade where you used to see someone who say, oh, I hit a risk to reward of 1:10. It's not magic. This is it. We would have been risking almost about 75 pips on this trade. No, almost about 75 pips, and we'll go for almost about 1,700 pips. You would have already hit. That's the price right there. The price already hit that target. Risk to reward of 1:10. All right. But now another rule: if you are going for any risk to reward which is above 1:2, you need to use trailing stop, and that trailing stop is equal to 1 arrow. Let me explain what I'm saying. I'm going to pull down a little bit so that you guys can understand. I need an empty space, right? Good. Let's just say you are entering. I need a pen. Where is the pen? Which section has a pen? Okay, it's this one. Let's just say a market is like this, right? The market is like this. It's an uptrend, right? And you enter somewhere here. You enter on the buy somewhere here. You enter on the long somewhere there, and your stop loss, let's just say your stop loss is somewhere here on maybe about 90 pips, and you're going for a risk to reward. You want to go for a risk to reward of 1:15 even. 1:15. What happened? You can actually go for a risk to reward of 1:15, but you need to learn how to manage your risks. If not, that trade is going to end up as a loser. So forget about that target. You already know, okay, I'm going for a risk to reward of 1:15, but you need to manage your risks. And part of managing your risks is using trading stop. What you ask yourself is, what is my arrow? Your arrow is equal to the risk on that particular trade, all right? It's equal to the risk, which is equal to your stop loss distance. That's it. Arrow is equal to risk, which is equal to your stop loss distance. That's why anytime you hear of risk to reward, it just stands for the risk you are risking on that trade and the reward. So what's our risk, our stop loss, and the reward is how many times. So if we are talking about the risk to reward of 1:10, it will be our stop loss times 10. Can you see this? So in that case, this arrow here, which is our risk, becomes very, very important, and you're going to trade your stop loss according to that arrow. Meaning, if we are risking, say, 100 pips on this particular trade, as soon as the market goes up by 2 arrow, listen, As soon as the market goes up by 2 arrow, so you wait, 1 arrow is going to be somewhere here. So the first 100 pips to go up will be there. Second 100 pips will be somewhere here. So as soon as the market goes up to 2 arrow, voila, you remove your stop loss and you put a break even. Meaning your stop loss at that point in time will be standing somewhere here. This will be, I just need a line so that I can just be pushing that line up for you guys to better understand. So I just need a horizontal line. So at that point in time, your stop loss will be standing here and the current market price will be here. All right. Now, if the market again continues from this arrow again and goes up again by 1 arrow. Remember, by 1 arrow, it means the market is going to be standing somewhere here. Somewhere here. So if the market is standing somewhere there, it has gone up again by 1 arrow. What will happen? You take your stop loss again, and you put on 1 arrow. So at every point in time, the distance between your stop loss and the current market price, I took the wrong line. So what has to go up is our stop loss. So our stop loss will be standing right there while the current market price is there. So at every point in time, the distance between your current market price, and your stop loss has to be 2 arrow. Meaning the distance between this point and this point has to be 200 pips at every point in time. So that you don't suffocate your trade. If not, most of your trades are going to be prematurely closed. You will see a very big position is going to be closed, and then you will just be crying on the sideline because you suffocated those particular trades. So if the market again continue from this particular point and we go up again by another arrow. Let's just say we go up again by another arrow. Let's just say we go up again by another arrow and we are standing somewhere here, right? I don't know why my pen. Okay, sorry. And let's just say we go up again by another arrow and we are standing somewhere here. What will happen? You just again have to take your stop loss automatically and you put here at 2 arrow. Meaning even if this market has to go your way, you've already blocked in 200 pips in profit. Even this market has to go against you, you have already blocked in 200 pips in profit. You've already blocked in 2 arrow. So at that point in time, you don't care. Even if the market just came like that, boom, and hit your stop loss, it was a trade of a risk to reward of 1:2. You made 2% of your account if you were risking 1%. And you just keep doing that. You might even go up to hitting your TP on a risk to reward of 1:10 without the market actually reversing to hit your stop loss. And how do you put this? You put it's automatic. You just go on your MetaTrader 5 and you set the trailing stop automatically. And this is how you do it. I'm going to quickly show you guys so that you don't get confused, right? Let me just quickly. Good. I'm just going to open any trade right here. Let me just quickly use this example to show you how you can put an automatic trailing stop. Remember, in our case, what was our stop loss? Our stop loss was 100 pips, and that is going to be the trailing stop on our trade. So what you do is you just come and right click on that open trade. You go to where it says trailing stop is right there. Trailing stop is right there, and you need to go to custom. Go to custom, and you click on custom. And our trailing stop is now 100 pips. Remember, 100 pips is the same as 1,000 points. So you put there 1,000 points and you click on OK. Boom, that's it. Our trailing stop is already there. Anytime the market goes in our favor by what? By 100 pips, the trailing stop, the market is going to trade. So from this particular point, let's just say the market, if it goes up by 100 pips from here to here, from here to here, and then what will happen? Our trailing stop will move from, the stop loss will move from where it is, from somewhere here, and it will be at break even at that point in time. So in this case, even if you are trailing by every 1 arrow, don't worry, that's not going to be suffocating the trade. So let's just say your stop loss is 100 pips. To keep it simple, just trail your stop loss by 1 arrow. So if the market goes in your favor by 1 arrow, the trailing stop is going to automatically move up. You don't need to even come and watch your trade. The trailing stop automatically follows the price, but it respects that distance between what? It respects that distance between your stop loss and the current market price. So you can test trailing with 1 arrow, and you can also test trailing with 2 arrow. Test trailing with 2 arrow. In that case, what I'll do is I'll just go on modify, go on trailing stop, and instead of having 100 pips there, I'll have 200 pips. This is 2 times our stop loss, right? So I'll have there 200 pips. So in most cases, 80% of the time, I trail my stop loss which is equal to 2 times my risk. So if my stop loss is 100 pips, my trailing stop is 200 pips, so that at any point in time, the distance between my current market price and my stop loss distance is always 2 arrow. And it follows the price, so you don't need to come and be pushing up, 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 up. No, it follows it automatically. You don't need to worry about that. So that's how you're able to put an automatic trailing stop on your trade. Now, remember, we're talking about in a situation where the market is what? Is in a consolidated market. What if the market is actually in an uptrend? Let's just see that particular example so that at least I'll know I've covered everything about trailing stop. What if the market is actually in an uptrend? I'm just going to reduce this to this to this. That was our last trade. And if I can extrapolate this, you see very, very clearly, this was what? This was our last resistance level, which became our support. Can you see this? Which became our support. So we can easily draw now our trend line from there to plot our next support and resistance levels. So I like to put it at the center so that we can see very clearly. So let's just go here. What we use here is going to be our inverted rectangle. So let's go here. We need this rotated rectangle, and we plot from here right up to here. We plot from there right up to there, and then we need to just take it down a bit. I want my, just like this. Boom, that's it. That's it. So you can see very, very clearly this is now my support, and here again, this one from there right up to there, and then expand it a bit, is going to be what? Our resistance. Support, resistance, and you can see this one was also broken right here. You see why I told you guys, if the market is in an uptrend, don't look for sell opportunities. You are only looking for buy opportunities. Let's continue plotting this. Another support now was this one. Another area was now this one to this one, and boom, that one. So that is it. We can always increase this one a bit. You can always just increase this one up a bit. So you can already see where we are waiting for the market to tap in, right? You can already see very, very clearly. So in our case, so long as we went out of this particular trade, you can see we would have gotten in here on a buy, go off for a risk to reward of 1:2, would have gotten out somewhere there. The market pushed down again to our support right here. Remember, I said if the market is in an uptrend, you are only looking for buy opportunities. So this one is going to be our support, and this one is going to be our resistance. Right? That's going to be our support and our resistance. And you can see clearly that the market is in an uptrend. Once the market is making lower lows, lower heights, lower lows, lower highs, lower lows, lower heights, that's a clear uptrend. So you are only looking for buy opportunities. So you have gotten in again somewhere here, risk to reward of 1:2, you go out of the trade. And look at how this momentum was broken right here. You see, so I wouldn't have even said, oh, we would have lost this trade right here, because I told you guys, if it's in an uptrend, don't look for a sell trade, only look for buy opportunities. So at this particular point in time, the market didn't even push down to our support level right here. What did it do? It broke this up with this resistance, which became now our support for this other trend. So this support, what happened again? You just wait for a retest, a break and retest, break and retest. Can you see how awesome it looks? Break and retest, we would have gotten in again somewhere there. Boom, go out for a risk to reward of 1:2, would have already been out of the trade, clearly out of the trade, and then again you got in there. So at this point in time, look at where the price is standing. What are we expecting to happen right here? We are expecting this clearly. We are expecting our price to pull right down to our support. We are expecting price to push to our support before we can look for a buy opportunity somewhere here. If we are trading support and resistance, that's what we are looking. We're waiting for price to push right down here. That's where we're going to be looking for another buy opportunity. So you might be asking yourself, oh, on gold, where should I be entering again on gold? When should I be looking for a buy opportunity on gold? We're waiting for price to tap right down here, which is going to be about to retrace in the opposite direction for almost about 200 pips, so that we can look for what? We can look for a buy opportunity right here. But if it doesn't come right down here, we plan for another scenario. So if our resistance is instead broken, what we'll do is we'll wait for a break and retest, and then we continue going up. This resistance will become our support at that point in time, and another resistance will be formed right up there, and you continue trading. This is how that lady, this is a simple strategy. I remember I did a video on trading support and resistance almost about 3 years ago. It's still on this particular channel, and that lady has been following me for more than 3 years. She used that simple trading strategy, that simple support and resistance, and boom, she's already funded on phase 1, phase 2, and already trading on the funded account with good funded trader. So this is how you trade support and resistance. Those are all the rules you have to follow, all the ins and outs, all the tricks, all the secrets to ensure that you are able to make money trading simple support and resistance. Remember, I told you guys I was going to be giving you guys a gift at the end of the video. So we're going to be doing a giveaway on this video where 5 traders are going to be getting giveaway accounts from good funded trader. All you need to do is to comment your thoughts about the strategy, check out good funded trader, like this video and share with someone. And if you are not subscribed to the channel, subscribe to the channel. If this is your first time also getting funded with good funded trader, use the code on your screen to be able to get a 50% off at checkout with your challenge. And if you are already funded with them or you've traded with them before, use the other code below and you get up to 30% off on your challenge. Check out my free Telegram where I'm going to be able to, keep you guys updated on simple strategies like this, share simple signals with you guys. And if you want me to mentor you one-on-one, make sure you check out Godlove University, link on the video description, where you'll be able to join my academy where I can take you from A to Z, show you the support and resistance strategy amongst other strategies you can use to trade in the Forex market. Most of you guys have also asked about Perps Pro, which has become the most profitable viral and the most recommended Forex robot. You can also check it on the video description. Check out the video that is going to be coming at the end of your screen, because that was the first detailed video I did on a review on good funded trader, showing you guys all the awesome features they had. Check out the playlist, which is our series. We are currently trading to pay out, which on that series our goal is to trade to pay out with you guys, and we've already gotten a couple of payouts. So check the playlist to also watch that particular series. Click here to subscribe to the channel if you haven't done so, and I'll see you guys on these other videos. Peace.